Hey traders, in today's video, I'm going to show you how to find your daily buys fast across 24 pairs without wasting hours on the charts. If you're in your 50s and want a simple, no-nonsense approach to streamline your trading, you're in the right place. Let's dive in and make trading work for you. So like I said, we're going to go through 24 pairs quickly to show you how you can streamline that process now with your market buys. So the first thing we look at is the market structure break. Where's our last break of market structure? Well, we have this internal structure break right here to the downside, and we're looking for continuation bearish. So we understand that the market has reversed and made that reversal of internal structure. Our last swing structure, where we had a break to the downside here of our structure to the downside, and then we have a break to the upside. Let me just change those to that structure break. That's our swing reversal. So we're looking bullish. This is showing me the internal structure has reversed bearish. So now we have a bearish bias. Straight away, we understand that our internal bias is now bearish, even though our swing structure is still bullish. Now we look at the actual individual candles. After today, we will see a close of this low of this daily candle. That's then going to give me a bearish bias as well. So seeing that we've got a bearish bias with the internal structure and a bearish bias based on the break of this candle here to the downside today, and we close it, that's going to give me a bearish bias only on this pair. I'll be looking to trade the lower time frames down to run this week low on the internal structure. So that's the EURUSD. Okay, nice and quick and easy. We know what we're looking for. Let's go to the next pair. That is the Euro-Japanese yen. And again, we'll do the same thing. Let's look at the swing structure here. Let's zoom out and have a better look at this chart. So we're going to identify we had a break of structure here to the upside. That's a swing break. We came from this low and we broke structure to downside. That gives me a weak low down here. Potentially, we could be making a higher low and we could see a reversal back bullish. We do have a strong high, so we are in a bearish market. But again, we're looking for a swing pullback. We can look for where our premium sits. So we could still see the market want to run up into a premium market. So let's go closer into this now and looking for any internal structure. Well, really looking at this, our last break was this area here of internal structure. So understanding the internal, and we can get rid of this here. We have an internal break to the downside here, showing me that we have an area of potential supply in the market. We could come back up into that premium area. So based on the swing structure, the internal structure, we are bearish. We're just looking for a reason to look for a sell. Now, looking at the individual candles, we have also been bearish. We can see that we ran the low of that previous day's candle. We ran the low of this candle, failed to actually continue lower, but then on the end of the previous week, we have run low once again. Now, if we just see this daily candle, we've actually swept the low of the previous week's low. If we see a bullish close here, potentially that is signaling we could see the market head higher, and we're looking for continuation to run the previous day's high. Now, we need to wait for this daily candle to close to understand if we could be looking for potential buy. Long-term bias, we're looking for a bearish move, but we're looking for a retracement back to an area of supply within the actual internal and within this swing structure. Short-term bias, basically looking for this to hold at a sweep of the low. We could be looking for continuation to run the daily high if we see it close like we can right now on the lower time frame. That is the Euro-Japanese yen pair. Let's now go over to the next pair, the Euro-AUD. Okay, same thing. Let's have a quick look, zoom out. We can identify that the market was bearish, swing structure break here. We can see we had a nice break up. This is more of a internal structure area, but we can see the market has made that swing pullback. So if we look at the internal structure to the downside, we can start to mark off where we see the breaks. So the market was actually bearish, and then we've just reversed bullish with that internal structure. That gives me a bullish bias, and we can mark out an area here of potential demand. So we could be looking for a swing pullback on the internal structure to run higher once again. So on a swing structure, we have this as a potential weak high. And let's mark this out. This is my low. So you can see we have a break of structure to the upside. There's my swing move pullback. We've pulled back into discount pricing. So that's below the 50% of this move. We're inside a discount pricing area. We've now seen the reversal of the internal structure. That gives me a bullish bias with the swing, with the internal. And we're just looking for a potential pullback to head higher with that internal structure. Now, on understanding the single candle daily bias, previous day we closed up. We're looking for this high to get run today. Looks like we may have a sweep. We have to wait for the end of this daily close. If we close bullish, we look for the continuation bullish. If we actually close like this above and hold above this level, we could continue bullish from here. If we're holding at this level, it's a sensitive area the market's holding at. If we close back down bearish, we could then start to see the start of the swing pullback on this actual internal structure. So again, that's your bias, potentially bullish on the EURAUD. Let's go to the next pair, the Euro New Zealand. See how quickly we can go through each chart doing this. Again, let's look at a longer term structure. So we can see the market actually just closed to downside there, broke to the upside. We had a quick drop, move higher. So we're going to see that as a sweep of the high. This is then my weak high in the market. This is my strong low. We don't need that level. And potentially we're looking for the market to pull back into where? Into that discount area. And remember, if you're not sure of any of these concepts, you will find a playlist throughout this channel which covers your market structure, covers your supply and demand, covers everything you need to know that I'm going through in this video. So once we see the market dropping down, we can see this is our last internal push to downside of structure. We then have a small break there, but this is going to be where we see the breakout. And this would be my internal structure. So for an internal push to downside, that's what we're seeing, a bearish move to downside against this swing move. That doesn't mean we can't see a bullish move away, because what we're now seeing here is a continuation of the daily high being run. So we can see that we had a close up previous day. This day is currently closing up, taking out this high. If we see another close like this today, we'll do the same thing and we'll look for the next day to be run on those lower time frames. Now again, we are potentially looking for a move higher anyway with that swing structure. Internal structure is pulling back to a potential area of premium. So we could say this is a pullback. We're inside a premium now. If we are to see this hold, and we could look for the market here to run lower, to run deeper into this swing move, running this low, and then we could see a run higher. So currently our bias is a bit undecided on the Euro New Zealand. Yes, we are bullish with that swing structure. The daily actual candle bias is bullish as well, but the internal structure, potentially we have a swing pullback. So that's Euro New Zealand. Let's go over to the next pair, which is the Euro Great British Pound. Okay, let me give 1 second to have a quick drink. And hopefully you're getting the idea of how quick and easy you can master your bias in the market. Okay, again, look, we'll do this very quickly. We can see, again, we had a break here to the downside. Let's mark that out as a swing structure break. And then we broke back higher. So what do we have now? Now we have this as a strong low in the market. And we have this as a weak high. So we had a bullish bias with structure. We can take that away. On the way back, we can identify we had a break here to downside. This becomes our internal structure break. Then we have another break structure to downside. And that remains my high. This is also going to be an area of supply. So we have an area of supply below as we continue to push lower. Now, as we've gone deeper into this swing pullback, we're holding at this area below within the discount area. But look at the way the market is moving higher here. We had a strong push to downside and prices moving very weak to the side. This does suggest to me that we're more likely to see the market roll off and push through this low and continue on a bearish move. So that will be going with this potential internal structure. So again, we have some conflicting price here. If we look at the current actual movement now, we had a break above this high last candle, and currently we're looking for the run of this high. Now again, if we have a wick up or a close through, we look for the continuation bullish. If we have a wick up and we close back bearish, then we could look for a run lower. So remember to look for that individual bias on each candle. And there is a video coming in the channel this week which will teach you this in much more detail. So keep watch out for that video this week. So now let's look at the next pair. And we're going to look at the Euro Swiss franc. Again, we'll do the same thing very quickly. That this is easy to see. We have a break of swing structure to the downside. That's my current low in the market. We're looking to run to. There's your current swing high. And again, you'll be looking for that swing pullback into an area of premium. We've already done this and we see the market rolling off. Now, if we look at an internal structure, this was a break of internal structure. And let me just, in fact, make that internal structure. And we have an area of what here? Supply in the market. Where does price come back to? To the supply, and then we start to roll off to the downside. So you can see how that structure is agreeing with the bearish bias on both internal and both swing structure. Now what we need to understand is what about that individual candle. At the moment we're seeing price closing down on the previous candle. We also took the liquidity at this pullback and we closed it. So we're looking for the continuation today to run lower and run this low. That's the area we're looking for price to run for continuation on the lower time frames. So you'll be looking for pullbacks within here on a 15-minute to run this low. Now, obviously, if we close the inside candle today, we continue to look for this low to be run until we see the market pushing above the high or the low with either a sweep or close of that candle. But long term, we're bearish with a bias on this pair. We're looking for sales. We're looking for the continuation lower. Let's have a look at the next pair. That is the pound US dollar. And the idea of this video is to show you how quickly you can go through every single pair, marking this up. Again, look, there's our swing structure break. We then have a pullback into area of demand, another swing break in the market. That gives me my strong low in the market. Straight away, we know where our weak high sits. And now we're looking for that swing pullback into an area of discount down here to look for another potential long. What about our internal structure? There's not much of an internal structure there. We have a break of internal structure here to the upside. And we've started to see an internal move lower. So we just potentially could see a break of this today if we see a close down. If we see this starting to push lower here, it's going with the actual single candle daily bias. If we close through the low of this one, as we did at the end of the previous candle, we're closing down. We've got a bearish bias. We're looking to sell. So on a retracement against the swing internal structure here, looking to sell down with that daily bias on a single candle. So looking to move lower. On the next pair is the pound Japanese yen. We look at doing the same thing quickly. This chart is not as easy to see, but I'll be looking at marking this as my swing high break. That's my swing structure break. And then this is my low with break to the downside. So then I can mark this off as a strong high in the market. This is our origin area of potential supply up here. And this is my weak low. Now again, I like to see the market pull back on a swing pullback into that premium area. We don't have to, but it's where I like to see the market move to. Now, if we look at our internal structure here, we have a break of internal structure right here in the market. That's going to leave an area of supply. So we can mark an area of supply up here, which is inside that area of what? Of premium, where we could see a swing pullback to, which means we could still see the market want to run higher from here up into this area of supply before we see a run for that weak low. But if we now go by what we're seeing on an individual candle, we can identify we've been running bearish. So we had a break of structure here to downside. On the single candle, we held Okay, we failed to run lower. The next candle though, we actually ran lower once again. And then we have this current day, we are sweeping the previous day's candle low. So if we close again, as we see right now, we could look for a bullish move higher. It all depends whether we see this current candle holding at this previous breakout level for a test, and then we run lower and we could see a bearish close, and then we continue to move lower. So unless we see the reversal of price with a new pivot formed with a continuation of bullish candles, we're not going to see this pull back to this area, and we could see a continuation from here to run this low. That's how easily you can look at a chart, look at your swing, your internal structures, identify that bias, and then watch your single candle bias. Let's go to the next pair in the pound, and that's the pound Swiss franc. So again, look, we have a simple break of structure on a swing move to downside. That gives us a low to run for, and it gives us a previous strong high in the market. If we look at where price currently sits, I believe we're around about that 50% area. So we could continue to run from here to downside. Again, looking at the internal structure break, there's our last internal structure break, leaving an area here of supply where we could still see a pullback to within that premium area. And if we look at the individual candles, we're seeing a similar pattern here on all these pairs. We have a break here to downside. You're looking for this low to be run today. Currently could be an inside candle. We have to wait to see what this candle actually does at the end of the day. If we retest this low, or even this previous low here, in fact, so that was an inside candle, we could now see a run for this low today. And that's how we could actually then look for closed through this low to continue to sell this market. Then we perhaps could see a continuation lower. Until we see a pivot formed and start of a bullish move higher, we can't then look to buy towards this area for potential sell again. So that's the pound Swiss franc for our bias. We're on a swing and internal structure bearish, and we're just waiting to see if we continue bearish with that individual candle. On the pound AUD is our next pair. Now, just like we saw on the Euro AUD, I believe that was bullish. We have a bullish bias as well on a swing structure, where we can see it's our high and this is our low. We can still see a pullback from here. If we go from this swing low to this high, we are within discount. We could continue higher from here to run this high. If now look at the internal structure, we don't really have anything here. We could say we start to push bearish from this swing high internally. And this is how you can quickly look at your internal structure. We broke to downside, failed to run lower, then we broke higher, and then we've actually now just broken higher once again. So we have a bullish bias with internal structure and a bullish bias on that swing structure. And we've pulled back into that area of discount, so we could potentially see the market continue to head higher. We do have here the last area of demand. We could still pull back to that area of demand. We can see that we previously bounced off this area of demand as well. So we have a bullish bias with the area of demand. That's understanding order flow. There is videos within this channel, and there's actually a full order flow playlist as well in the channel, which will help you to understand order flow. Now, understanding the single candle bias, we broke out this previous candle, closed higher. We're looking for this to run this high and to continue to be bullish. But if we were to see the candle closing after sweeping this high, that could show the start of a pullback towards demand, or to fill this imbalance that we could have left over and this imbalance here. So we are still looking bullish, just looking for that right setup. If we close up bullish once again today, then I'll be looking for the next day to run the next day's level. And that's how we can simply just look through those charts, mark up your swing structure, look for the bias, look for your internal swing structure as well, look for that bias, and then use that daily candle for the actual direction. So next pair is the pound New Zealand. And again, look, we do the same thing. We can identify, okay, let's just actually swing this out. We can see on a major swing, we've got a push up, pull back, and we can go back here just to look at this. We have a structural break. The market is more internal. I see this as a next swing structural break. Okay, so this is all our internal structure. And we had a pullback, and we start to see the pullback with an internal structure. So we make this lower high, we break to downside. And again, here we've broken back down with that internal move. Now we can also look at this as our current week high in the market. We're looking for price to run to, and down here is going to be our strong low. So for this swing move, we are bullish with a bias. Now for the internal structure, we did break out, left this origin area here of supply. So until we see the market running through this supply and then pulling back, we're not going to continue bullish. But now looking at this single candle, we can identify that we potentially could push through bullish today. We're waiting to see if we're going to close through to continue towards that supply. So we have pulled back into an area of discount already, and I'm just now looking for this to stay bullish with the candle bias, push through the supply to pull back to new demand to continue to run up and run this week high. So that's the pound New Zealand. Let's now go over to the next pairs of the AUD, and we're on the AUD US dollar. Now on this pair, we in fact swept this high, and it does look like from this sweep, we may now run for this low down here once again. So this one, we did have this swing break to the upside, then we had a pullback, swing break to the upside, and then we had the reversal bearish. So we are actually bearish. We only swept that high, and looks like we're now running back for this low. Now if we look at the internal structure here, you can see that we had a break here to the upside of internal structure. The market moved sideways, and now potentially we've now broken back bearish with that last candle. Now we also have the single candle breaking to downside with a single candle. We're taking today's low, previous day's low once again, looking for a close bearish to continue to sell this market. So this is looking very bearish at the moment with the swing structure, the internal structure, and the single candle structure. So that is the AUD US dollar. Let's now look at the next pair. That is the AUD Japanese yen. Again, let's zoom out. We can see the same area of price that we saw in those other pairs. We have a nice break of structure there. Here's our low. We get a break to downside. What does it give me? It gives me a weak low in the market and a strong high up here. Again, if we go in closer, we're going to identify that last breakout area here, which is our internal break of structure, and left an area of potential supply. Now, price may have not come into the actual supply, the pivot zone, but it did come into this full range area, and we're starting to see a push to the downside. Now, if we look at the move back, okay, here we've come to the 50% area, so we could continue to run the low from here. We don't have to come any higher, and this supply may be the zone where we're going to see a continuation to the downside. Now, the previous day closed bearish, and the current one has only swept the low. So it all depends on how we close on this candle. I'd like to see a pullback to this level perhaps, and then run through and close the low to show me a continuation as bearish. That is the AUD Japanese yen. All those Japanese yen pairs are looking very much the same. Swiss franc, AUD Swiss franc, okay. We got a move up. Let's mark this out. Break of structure, swing structure to the upside. Now we failed to run higher, met a lower high, and you broke this low. Now a true structure break is also going to be this level here, where we broke the downside. Either way, it leaves this swing high and this week low in the market. We're looking for that pullback, remember, into that area of premium. We've already done this. And we also have the internal structure break here, where we left an area of supply. So we have an area of supply here in the market. Where did price come back into? And we saw a move lower. Looking at the individual bias once again, that our previous candle is closed bearish. So we're just looking for a continuation to run down today. And again, we haven't yet swept that low. We could see a pullback to retest this previous breakout point, or the 50% of this candle, to then look for this low to be run. And that's where you go down to your 15-minute time frame, looking for those entries. And you can learn that within the top-down analysis routine video that I shared previously in the channel. That's a great way to understand if you're in your 50s and you're struggling with a top-down analysis. So let's go to the next pair, which is the Audi New Zealand. So looking at this one, again, let's look at the major swings. Let's look at that as a break to the upside. And we can look at this as a potential strong low. And then we have a weak high up here. Now we have pulled back quite deep in this pullback phase to this area of range of price, and we're coming to an area of demand. So potentially we could see a continuation higher from here. If we look at an internal structure, we did have this sweep of this internal low. So you want to see the market running above this high. So run through that level will give you the indication that we're going to see a reversal of that structure and we can start to look for a move higher. Now we obviously gapped down in this market. This looks like it's going to be a sweep of this low and potentially we could see a run higher. If we do see this, then we can start looking for a bullish move the next day to run the previous day's high. Now remember, we've got some time yet before these daily candles close, and this is how you'll be able to do your daily analysis very, very quickly. That's the Audi New Zealand. Let's now go over to the New Zealand pairs, and we'll start with the New Zealand USD. And just like we see on the other pairs, let's look at what happened. So this low, we only swept that low. And let's go out further. And we've got a push down, breakout. We'll start from this area, structural break, pull back. Okay, so you could look at this as a structural break as well. And then we had a break to the upside. And then we look at this as a full move to the upside, swing pullback, it's a rather large area. And we have a bullish bias after that sweep. So this is how I look at this quickly with that swing structure. And we're looking for the swing pullback. Now we need to look and understand that, yes, we're making a swing pullback. Why? Because we broke and reversed our internal structure. The market pulled back into this supply, and now we've made another potential break today. So you can see that this area of supply is where price came back into. So now we have a bearish bias with an internal structure, pulling back against this daily swing. And we're looking for now, if we do close down here, that's going to create this new area of supply, bearish movement with supply. And because we're seeing the closing down of those candles, again today, if it closes like this, then you're looking for continuation bearish, but we're also looking for a pivot to be formed. And very often you're going to see those happen after we run an area of previous demand, where it was the previous bullish move up on this area. Again, you can see here a previous move up, we broke through, then we pull back, break through again of this internal structure, we can see another pullback. So our bias is bearish, okay, short term. On long term, we could see a swing pullback for another run higher, but I'd be looking to sell this market only based on the individual break on the bias on the single candles and looking at the actual bias of the internal structure. Let's now go to the next pair, which is the New Zealand Japanese yen. So again, like we see on those other pairs, we've got this big wick up where we see a break of structure. Market moves up higher, and eventually from this swing low, we broke lower, leaving this as a high in the market, and this is our low of our current trading range. Now we haven't yet pulled back, I believe, into the premium area. If we just move this down, we have, we pulled back into premium, and we had an internal break right there of our structure. Now we've also run this high, we swept it. So the market has basically pushed into this area of imbalance. So we have an area leftover imbalance above this high. Now, if you're not sure on your imbalances, there's a playlist in the channel as well, goes through to teach you about the imbalance. And since this, we can see we've started to run bearish, taking each day's daily low. So again, this one failed to run higher after the sweep, and we continue to run bearish. So we're just looking again for the run lower. That's already happened. Could be another potential inside candle like this before we run lower once again. So our bias is bearish on the New Zealand Japanese yen. Let's look at the next pair, and this New Zealand, and that's New Zealand Swiss franc. And once again, we have this break here to the upside as our swing move higher. And it comes from this low, so that's our break to downside. So it's quite a big reversal here to downside. We make this low in the market. We have this small pullback, that's an internal move, and this becomes my main high. So we do have the market creating this larger swing to downside, okay, all the way down here. We have pulled back into the area of premium already. And what that's done is just coming to this retest, this breakout level, where it's become a sensitive level. Now, the thing is, we had this break to downside within, which is our, get that correct one, is our internal structure to downside. Then we broke to the upside. Okay, and you see we continue to break higher here. So we broke up, pulled back, broke out again. Then we've broken out once again. And this is our low to be broken to downside. We've just shifted bearish. So you can see how the internal structure shows us the pullback phase and then the reversal back out. That leaves me in the area of supply I can mark here that we could see a pullback to come into. Now the individual candle, the last candle broke bearish. We're currently coming back to retest that from below. And as we haven't run the daily low yet, we could close an inside candle. But we can also look for the market to hold here, reverse, and run this week low on the internal structure. That's how you can look at the use of these areas. So with a bias of the internal structure bearish, the single candles running bearish, we are looking for potential pullback to supply, but we're looking for sales in this market. Let's now go to the next pair, which is the US CAD. And once again, let's just look at this last move. Simple break to downside, easy to see this. Let's not worry about all the previous price. That gives me a swing high up here and a current low as we see price pulling back. That does mean we're looking for a deeper potential retracement, okay, up to this area. And what do we have? We have a break of internal structure that I can mark right there in the market, leaving an area of supply. So we have an area of supply within the premium area where we could see price pulling back to. So we have our swing structure, our internal structure. Okay, we've already got this on major move, but if we start now breaking up here, as we can see, we are looking to head higher now, running the next daily high. Currently inside candle still, we could see a inside candle, a few candles forming, holding inside this area of bullish imbalance, and then running these highs to pull back. So the US dollar CAD for me is bullish on a potential swing pullback towards this area of internal structure supply. Let's now go over to the next pair, the US dollar Swiss franc. And again, let's look at our swing structure. So there's my last break of swing structure, giving me a strong high here in the market, which I do not want to see removed. And this becomes my current week low as we make a sweep of the low. So you can see the market's made this sweep right here in the market. Potentially that shows me a bullish move. And if we see today's candle closing bullish through this high, we'll look for continuation until we run this next high here. If we're looking for pullback for continuation to sell, we want to come up into this next imbalance area to be inside that premium. So for me, we do have a push down here internally, as well as the swing, leaving me an area here of supply where we could very well still come to. All depends on how we see the market running up from here. And remember, once we push up from here, we're looking for a run of this high to be bullish with that internal move back up towards this swing area of supply and that internal previous supply as well. So I am looking for potential bullishness on the US dollar Swiss franc at the moment, but long term, I'm looking for a sell again with my bias. So the next pair is US dollar Singapore dollar. Now this one, we need to zoom out a bit to see. This is all internal price action for me to the downside. Again, all this is internal price action. Major sweep of the market, and then we have a major break. Now we could also look at this as a swing pullback continuation, looking at after this previous sweep, and we then had to run this low. So that's a better looking area for me to mark out for my current swing. I'll get rid of this breakout and this level here. That's a better looking swing move. But if we go in closer, we then need to recognize that we have our internal structure as the market continues to push lower. So we have a break of structure, another internal break, and we have another small internal break there. And finally, you can see the market has just swept this low. So we're looking for this high to be run next. And if we go closer in, we can also identify that if we close up here, okay, that's going to be a bullish bias on the individual candle. And once we close through this level, we have a bullish bias on that internal structure, where we can start to look for the market to run higher against this full swing move down back into these areas, okay, this top area of premium. So follow the internal structure back up on the swing pullback, and obviously follow the individual candles once we see the individual breakouts. Now these bias on these single candles, where you'll be able to go down to a 15-minute, look for that trade for that day if you're more of a intraday trader. If you're looking for more swings, then you're looking for the break of the internal structure, pull back to demand, and then looking for your next entry to go long. There's a few different ways you can look at this when you're trading your bias. So the next pair is the US dollar Japanese yen. Now we're going to see the same thing on this pair. This big spike up where we see that break of structure. And then we get this break to downside. Very, very easy to see. That then gives me this as a high. And then we have this as a low. And the market has come very close, but hasn't actually run the low. If we just bring that up a bit higher. Now, what about our internal structure? We had an internal break here, which left an area of supply. Again, that's inside the area of premium. And as the market continues to push down, okay, we have this higher low potentially forming, and we're looking for this high to be run, okay? But looking at the actual candles by candle break, the previous candle did close bearish, and you're looking for this low to be run today. Now, potentially we could still see a push down to run that low, to run this low, and we continue with a bearish bias. But what we're looking for is how this candle can close today. If we close above this high, then we could see a start of a bullish move back up towards this supply. That's a longer term pullback to this area for another sell. Your short term bias will be going with those previous daily candles. And obviously you do have an internal push down here, and you'll be looking for the internal break up here to show you that internal structure has shifted as well. Because even though we have this internal area here to the downside, you have the pullback, lower high, and you start the internal shift back down. So that's the US dollar Japanese yen. Potentially could continue low with a bias, but it depends on how this candle closes today. Next is gold. And gold is going to be very easy to look at because it's in a bullish market. So we pushed through this previous high, structure break higher. Again, we pushed through once again with this high. And then we have this current high where we have not gone any higher. This becomes my strong low. Potentially, we could see a pullback now, okay, into the area of discount down below. And if we just mark out this previous, okay, break here to the upside and this swing high as well. You could even just mark off this high internal move to the upside. So because that's internal there, does leave this as an area of demand where potentially price can hold and bounce higher. So we could just come into this area of demand. We don't have to come back into this area of previous discount. We could see this area of demand holding, which means we do have some equal lows here of liquidity that will be swept. Now, looking at the individual price on these candles, I'm looking for this low to be run today to continue lower. So my bias is short term to downside, pulling back to demand, long term to continue bullish. Silver and the final pair, and looking at the bias once again on a swing structure. Okay, we look at this, we have a break to the upside here. Zoom out. There's your last bullish move to the upside. Even though we have this swing here to the downside, your main support low is this area and your high is up here. So that does mean we've pulled back to this area of demand and we've bounced out. Now, internal structure as well was previously, as we went lower into that demand, this is your internal structure. And this should give you a great insight on how you can quickly now just go onto any price chart, mark up your swing and internal structures, and then look at the bias on a single candle close on each daily close. Now, we do have this breakout, pullback, move higher. Just about swept only that high, but you could see that potentially we've closed and head back lower. It could also be a swing move of this first breakout. All depends if we got it closed through that level. But either way, we have this area of demand the market's pulled back into. And again, it is that full swing from here to here. We're inside discount and it could be a good area to look for buy from. Now, until we actually break through the high of that candle or the low of that current candle to the downside of the same candle, should I say, we don't have a bias on a single candle bias. Yes, we did close down on the previous candle here to downside, and we're now testing it from below and we could see a continuation lower, but we only pushed to this low here and that's it. We haven't seen an actual close through. We only swept on this candle and this could be a push higher from here. Now we are looking for a swing move, okay, out of this area of demand back into this demand. We could look for a continuation now to run this high up here. So I'll be looking for bullish bias at the moment on this pair, but I'll be waiting to see the bullish candles starting to close above those highs, and then you can start to look to take those trades. Now, the next video coming up, we'll be going through that daily bias video. If it's not already released, you'll find another video coming up next, but that is the next video I want you to go through and watch to understand your daily bias.